Vibe. I'm Niamh and I'm with Steph today.
Hi.
And we're going to be discussing a topic that affects so many of you, student finance. Over the years, the landscape of funding education has changed so much, and today we're going to be discussing the latest change, which is Phase 5. As of August the 1st, 2023, loans for undergraduate students have changed, and this will affect students starting undergraduate study in September 2023. So Steph, how will students know if the new Phase 5 terms are relevant to them?
Students starting a course on or after the 1st of August 2023 will be on Plan 5 if they're starting an undergraduate degree, starting a postgraduate certificate of education, PGCE, or if they take out an advanced learner loan. But if you're not sure, then just go on your online repayment platform and you'll be able to find out there.
So what about if you're a postgraduate student or continuing on your current course?
As a postgrad on a master's or a doctoral course, you'll be on a postgraduate loan plan. And if you're continuing your course, you'll be on Plan 2. But again, if you're not certain, go on Student Finance England and you'll be able to find out there.
So what are the Phase 5 changes?
There are 3 key changes. The first one is the repayment threshold has changed to £25,000 a year. That means that you won't start repaying your loan until you're making £480 a week, £2,083 a month, or £25,000 a year, pre-tax deductions.
So what if you're earning less than £25,000 a year?
If graduates are earning less than £25,000 a year, they aren't required to make any payments until they're earning that amount, pre-tax deductions.
Thanks for explaining that. So what about the second change?
The second change is an increase in the repayment period to 40 years. So after 40 years, your loan will be written off. This used to be 30 years.
And what about the third change?
The third change refers to the interest rates on the loan.
What is interest and how is it changing?
Interest is essentially the price you pay for borrowing money, and interest on student loans starts to accrue from the first payment to yourself or to university or college until the loan is fully repaid or until it's written off.
So how is this changing for the new Phase 5?
So loans are now actually going to be cheaper for students. On Plan 2, the annual interest rate was calculated based on the Retail Prices Index, RPI, a measure of inflation, and also an extra 3%. But on Plan 5, interest rates are just going to be the RPI with no added 3% charge.
So should students be worried about the new Phase 5 repayment scheme?
Students shouldn't be worried. The loan comes off automatically, just like tax, and you don't start repaying it until the April after you leave university, and only if you're meeting the minimum threshold of £25,000, and it doesn't go on your credit file, so it won't affect your credit score.
That's a great point, Steph. And of course, you should never be deterred from considering a university degree. The value of a degree is so worth it. There's access to numerous opportunities when you finish, amazing network of people that open so many doors, and not to mention the life experience and the friends you make.
Thank you for listening. We hope this podcast has given you enough information so that you can make the right decision for you and so that you fully understand the changes.